A leadership like this does not only guide, but it transforms the city from this to this. $180,987 sales transactions, 521 billion dirhams of sales volume, more than 700 billion dirhams of real estate transactions, including rentals and beyond. 2024, Dubai real estate broke all its records, and when we thought it cannot get any better than this, Q4 delivered an astonishing 147 billion dirhams in sales value alone, shattering all its quarterly records as well. Hello everyone, I'm Archana from Experience Realty, and a very happy new year 2025 to all of you. I would like to use this opportunity to thank all my clients who made 2024 special for me by trusting me with their investments and help me grow in my career. My 2024 predictions proved spot on even when they challenged the norms. Check out the link below if you missed it. And in line with that commitment, as we enter 2025, I present to you the market analysis of 2024 and forecast for 2025. We will analyze if the trends continue. We will be understanding the demand and supply dynamics of Dubai real estate market. We will identify major factors that will drive Dubai real estate markets fundamentally in 2025 and beyond. We will analyze the tourism numbers and its impact on the housing market, the policy changes, and the government short-term and long-term agenda. Through trends, let's get to know the population growth and geopolitical factors contributing to the heavy influx of HNIs and ultra HNIs. We will go through the rental performance of the Dubai real estate market, the demand in the luxury segment, and the projects to look out for year 2025. After this, you can conclude yourself if there will be any corrections. This video will walk you through key insights, trends, and predictions and break all common myths with strong data-driven fundamentals. This will also help you to take informed and confident decisions in this complex market. Now let's dive into how 2024 performed and what 2025 holds for you. So first, how did market perform in year 2024? Dubai real estate market performed extraordinarily and made another high this year with record 180,987 sales transactions, which valued at 522.12 billion dirhams in 2024, which includes 4,304 commercial transactions valuing 9.7 billion dirhams and 4,352 plot sales valuing 86 billion dirhams. It marked a 36% increase in the number of transactions and 27% increase in the value of transactions compared to year 2023, where 133.1 thousand transactions valuing 412 billion dirhams took place. Dubai's real estate 2024 is all set to hit 700 billion dirhams in real estate transaction values when we include the rental transactions and beyond. The data for the overall transactions value is still being compiled. This achievement reflects significant transformation from previous peak of 2014 by 249% increase in the value of transactions and 249% increase in the number of transactions. Compared to 2020 low of 35,400 transactions worth 72.47 billion, the year 2024 figure represents a massive 410.4% growth in sales numbers and 620.5% increase in the sales value in a calendar year. This entire thing shows that how Dubai has transformed itself in the last 5 years post-pandemic and how investors globally are liking Dubai, especially after visiting Dubai for Expo 2020. This cements the positioning of Dubai as the real estate investment hub. In year 2024, majority of the transactions took place in off-plan sales. The data is still being compiled and we do not have the exact numbers of the transactions, but it looks like it's going to cross 110,000 mark. However, we do have the data of the resale transactions published in Gulf Business. The number of transactions rose by 14%, setting a new high of 61,100, with transactions value up by 21%, reaching 188.1 billion dirhams. The average price per square foot increased by 12% and reached 1,300 dirhams per square foot. That is $350 per square foot, reflecting a high demand for ready properties. By the way, ready market saw lesser transactions because no one wants to sell. To get a better and deeper understanding, let's dig in more into the off-plan data numbers. How did off-plan market perform in year 2024? Investors and end users both wanting to enter Dubai real estate market know that buying at launches gives them the opportunity to enter the market at lower prices. They can take the advantage of the payment plans and get the units of their choice. Even in high demand market, Dubai developers keep margin for investors. That's the reason the off-plan transactions are soaring. Off-plan sales in Dubai demonstrated an increased demand with a year-on-year volume growth of roughly around 58.7%, touching 147 billion dirhams worth transactions in Q4 2024. Market surpassing its 2009 quarterly sales peak, where the numbers of off-plan transactions were 26,629, reflecting a 19.4% increase. First sale from the developers rose by 30% year-on-year to 334.1 billion dirhams, with transaction volumes up to 51% to 119,800. The average price per square foot increased by 10% to 1,600 dirhams, whereas the number of off-plan transactions that were recorded in year 2023 were 68,783, which valued at 160.4 billion dirhams, and in year 2022 it was 43,151, contributing to 93 billion dirhams of sales transaction. This number is as per some credible reports, but for exact numbers, wait for the official figures from Dubai Land Department. You must notice from primarily luxury-driven market, the city has covered a broader mix of mid-range, off-plan and suburban projects. The rise of master-planned communities in the areas such as Dubai South and Mohammed bin Rashid City has further expanded the market beyond traditional prime areas like downtown Dubai, Business Bay, Dubai Marina and JBR. Because of these reasons, the historic peak of year 2014 has been tremendously exceeded in 2024 with a 187% increase in sales value. This growth is also attributed to both higher property prices and international investors benefiting from favorable visa policies and a stronger dollar-pegged dirham. Now, this brings me to the much talked about demand and supply gap. Dubai's real estate demand has historically been driven by residential population growth, visitors, tourists, and the millennial migration. Let's see what the numbers say. When a city grows from a residential population of 20,000 in year 1950 to a population of 3.8 million, its demand is based on the inflow of new investors, not only by its residents. Demand is directly proportional to the population growth, the daytime population. But let's first understand what daytime population is. There are 4 types of buyers category which contribute to the buying pool. Number 1, the residential population, which is 3.8 million currently. Second category of Dubai buyers are the UAE residents who are investing or living in Dubai but may have the residency of any other Emirates of UAE. Third category is more than 2 million tourists at any given time taking Dubai or any other Emirates visit visa. For your knowledge, Dubai is one of the most visited cities of the world, and this year we had record-breaking tourist inflow of 20 million. And the fourth category of the buyers in Dubai real estate are the international investors who see Dubai as the investment hotspot and keep investing for good returns or future homes in the process of migration to Dubai. The above 4 segments collectively contribute to the daytime population of Dubai, which is 5.2 million and are actively involved in real estate transaction activities. Let's see the trends in these segments with logic. First, population growth. There are 3 population growth scenarios that Dubai has witnessed over the last 3 decades. Low growth scenario where population increased by 2.86 per annum, medium growth with 3.5% per annum, and high growth scenario of 5.2% per annum. According to Dubai's statistical department, over the past 4 years, Dubai's population has seen steady growth in the number of residents. 2021 to 2022, population increased from 3.48 million to 3.55 million, which means a low growth of 2.01%. This was a recovery period post-pandemic. From 2022 to 2023, the residential population grew from 3.55 to 3.66 million, which means a median growth of 3.01% when things started rolling and Dubai went back to normal. And in 2024, residential population reached 3.82 million, which is a growth of 4.37%, returning to the high population growth numbers. And this constant for another 5 years will take the residential population to 4.7 million. By the way, the trends look even stronger, and I'm giving you very conservative numbers. The current daytime population of Dubai is 5.2 million. Residents, 3.8 million and 1.4 million visitors. And residents from the other Emirates living in Dubai combined. This number by year 2030 will grow to 6.8 million to 7.5 million. Dubai government's tourism target for year 2025 alone is to attract 25 million visitors. And on top of that, the internal demand from the UAE population, which will also grow alongside because of the booming economy and buying potential. If we have a slightly longer term view, even with a low growth rate of 2.8%, the city's residential population, according to the current trends, is expected to grow from 3.82 million to 5.6 million in year 2040, equating 46.66% growth of the residential population only. The total population growth with these trends look to be crossing 10 million conservatively, which means to meet the demand, Dubai needs more than double the infrastructure in every single sector, and that too in less than 15 years of time. At the time of the Vision 2040 announcement, government initially expected the daytime population of the city to reach 7.8 million. But according to the statistics, the numbers are soaring up. As a result, you see many government infrastructure initiatives and development activities that I have covered in the later part of the video. Knight Frank further forecast by year 2040, Dubai will need 37,600 to 87,700 homes each year to accommodate a population between 5.8 to 8.6 million residents if the rate of population growth is high. Now let's talk about 2030 scenario. By 1.8 million moderate to high, 2.5 million daytime population increase, a massive growth of 50% more infrastructure is needed. With an average household size of 3.5, these scenarios suggest a need for more than 350,000 new freehold residential units by year 2030 to meet the growing demand, excluding the ones that are already supposed to be handed over because Dubai historically has been short of housing infrastructure. Also, according to Bloomberg, Zawiya and Knight Frank, developers have been racing to satisfy the growing levels of demand for housing, estimating to try to deliver 300,000 homes by the end of year 2029. Apartments will account for 80.1% of the total supply due by 2029, while 17.4% will be villas. Branded residences will account for another 2.4%. Data reveals an acute villa shortage with just 8,900 new villas expected by the end of 2024 and a further 19,700 by the end of year 2025. All developers put together to the best of their capacity cannot deliver more than 50,000 residential units year on year. Assuming historical delays of up to 30% of units each year persist, 170,000 units will only realistically be completed over the next 5 years. This translates into 35,000 homes per year for the next 6 years, hinting a likely long-term shortfall in housing. This shortage is acute and does not suggest any slowdown in the property market. Forget about any corrections. This is just demand. Now let's shift our focus to year 2025 forecast. Developers put their best shows this year with all the launches sold out with a sale of more than 100,000 apartments. But in 2025, the planned launches of all the developers in total are forecasted to be not more than 45,000 new apartments because all the developers have exhausted themselves of the resources to meet the growing demand. The developers are sold out, contractors are busy, and the introduction of 9% corporate tax has further increased the construction cost. This all put together means the prices will go high significantly as the developers cannot launch at lesser prices anymore. And the demand of houses in the secondary market will also push the prices high. Imagine demand when the supply will just be 50% or slightly higher for 2025. Investors can just wish to get lucky to get units this year. In the last month of 2024, some major projects like the Valley Farm Grove, Emaar South Apartments by Emaar, Rashid Yachts and Marina by Emaar, Villa Nova La Talia by Dubai Properties, Dubai Island Apartments by Nakheel, Damac Islands by Damac Properties and Dubai Maritime City launch by Beyond, the new subsidiary of Omniat, saw a complete one-day sellout. And I am witness that none of these developers were encouraging to sell bulk to provide equal opportunity to every single retail end-use investors. But still, many of my clients and other colleagues did not get the units. They saw a complete sellout. The increase in the residential and commercial demand will keep growing, particularly in emerging areas such as Dubai Creek Harbour, the Valley, Dubai South, Mina Rashid, Dubai Maritime City, and the high-end areas that are likely to see a good demand are Dubai Hills Estate, Emaar Beachfront, the Oasis, Palm Jabal Ali, Dubai Islands, and Al Marjan Islands in luxury segment. Dubai tourism and impact on real estate and allied sectors. According to Department of Economy and Tourism, Dubai is already among the top most visited cities worldwide, competing with iconic destinations like Paris, Bangkok, and London. And by year 2025, Dubai has set an ambitious goal to become the world's most visited city with the target of welcoming 25 million visitors annually. And from the real estate perspective, this vision is a cornerstone of Dubai 2040 Urban Master Plan, which is focusing on enhancing the city's global standing as a tourism and lifestyle hub. Dubai recorded 16.79 million in international visitors from January to November, a 9% increase compared to the same period in 2023. Western Europe was the top source region for tourists to Dubai, accounting for 20% of the total number of visitors with 3.298 million tourists, followed by South Asia with 2.858 million tourists, accounting for 17% of the total number of the visitors. GCC countries came third with more than 2.5 million tourists, accounting for 15% of the total number of visitors. And Commonwealth of Independent States and Eastern Europe came fourth with 2.353 million tourists, accounting for 14%, said the report. The Middle East and North Africa ranked fifth in tourist flow to Dubai with 1.933 million tourists, accounting for 12%, followed by Northeast and Southeast Asia with a 10% share of 1.622 million visitors. The number of visitors to Dubai from the Americas during the first 11 months of the last year, according to data from Department of Economy and Tourism, reached 1.117 million visitors, accounting for 7% of total visitors. From the African continent, visitors number soared to 791,000, up 5% from the previous year, while it surged to 319,000 from Australia, accounting for about 2% of total international visitors to Dubai during the same period. Projections suggest that Dubai could surpass 20 million visitors by the end of 2024, as we do not have the official numbers from the tourism department yet. According to Statista, Global Statistical Agency, number of tourists could reach 44 million by 2029 in just 5 years from now, which means the number of tourists visiting Dubai will double in just 5 years. Yes, you heard me right. Just 5 years, the projections say Dubai will double its tourist base, which will have a direct impact on Dubai's real estate market, because the increase in the number of visitors means increase in demand of luxury homes, rental properties, and vacation homes. Dubai International Airport, also called the DXB Airport, consistently remained one of the busiest airports worldwide, according to Reuters DXB. It handled the staggering 44.9 million passengers in the first half of 2024, which is an increase of 8% compared to the same period of 2023. With the projections to handle 91 million passengers by the end of year 2024, this airport is on track to break its all-the-time high record of 89 million passengers, which means the most talked about Al Maktoum International Airport, which is the world's largest airport with the capacity to handle 260 million passengers, will soon be in action, taking the real estate prices in the south of Dubai to next levels. All this has helped Dubai's hospitality sector massively. The city boasts around 821 hotels, offering approximately 150,000 hotel rooms with an impressive 75% occupancy rate. The average daily rate for hotel stays in Dubai is around 536 dirhams, which reflects the demand for premium accommodations. Whether it's a luxury resort, a business-friendly hotel, or short-stay vacation rental home, it made money for all their investors. It suggests that Dubai is the place to be. Dubai's future is bright and potential is limitless. Dubai Mall, the place that I love, was the most visited place on planet Earth with 111 million visitors. Understanding investor types and its demographics. Now, who is investing in Dubai? Everyone. Yes, everyone from everywhere is investing in Dubai. Number one, Dubai is magnet for the rich. According to many reports, 67% of world's HNI want to buy their second home in Dubai. In 2024, Dubai welcomed 6,700 dollar millionaire individuals called in HNIs. Yes, the number of HNIs in Dubai increased by 76% from year 2023. This influx is nearly double the combined number in United States and Singapore, which historically have been the top favorable destinations of the wealthy. This trend is expected to continue, and the number of Ultra HNIs are the individuals with $10 million and above net worth. Dubai is expected to see a growth of 60% Ultra HNIs by year 2026. According to Henley and Partners, Dubai is going to see a 78% increase in the centimillionaire population in 1 decade. Centimillionaires are individuals with $100 million and above net worth. This growth of centimillionaires growth in Dubai in 1 decade is going to be the fastest rate of increase worldwide. Now, are you curious to know where these people are coming from? Looking at the new list of top real estate buyers of year 2024, in addition to Indians and Chinese, Britain rose to the top of the list, with Canada, France, and Lebanon being the new entrants to the top. Local Emiratis, Indians, Saudis, Chinese, and neighboring countries have been the traditional investors of Dubai, and the numbers have increased. They were followed by Africans, Iranians, and Russians, putting huge money in the market. Now it's Brits, Canadians, Americans, Dutch, French, and the one who sees Dubai as the destination. There are no people coming from third world underdeveloping countries. They come from countries that have been the havens of the globally rich, and the migration has just started. And with all my experience with these nationalities, I can very confidently say that they are here to stay and stay very long. Tax-free environment, economic and political stability, higher returns, best lifestyle, one of the highest per capita income, affordable housing, and the strategic location makes Dubai no-brainer. Now, there is no part of the world that you don't have investors from. Invest in villas or apartments. Now, this discussion brings us to another discussion, which is a common question that people looking to invest ask: whether to invest in villas and townhouses or apartments. Well, this comes to your personal choice and the budget allocated for the investment. In year 2025, Dubai real estate market is seeing significant growth in the demand of villas and townhouses. As we discussed, the influx of ultra HNIs and HNIs in Dubai who are moving with their families, in that case, villa becomes their first choice, driven by a 43% year-on-year increase in sales volume. Villas typically offer more space and privacy, which is ideal for families or long-term rentals. These villas are always located in the best of the communities, which can be done only by big developers like Emaar, Expo, Nakheel, Dubai Properties, Miras, Damac, Aldar, and few others, offering a better lifestyle for the families. The supply is always less because small-time developers cannot afford to do villa communities, as it requires a lot of capital to bring that sort of a supply in the market. That's the reason they are less in supply, which creates more demand in the market. However, if the planned budgets are slightly lesser, townhouses provide a balance with some outdoor space but less maintenance as compared to the independent villas. Townhouses recorded 36% growth in the transaction volume last year. Townhouses, being in lower price, become the perfect choice for the middle-income family groups, which translated into many buyers, and hence the demand becomes higher. The buyers in this segment mostly go for bank mortgages, helping a lot of potential home buyers, which is not a common trend with the independent villa buyers. So if you are investing for rental returns from the middle income groups or wanting to secure homes for extended small families and secure properties for them at a lower price, townhouses become the perfect choice. Also, the supply in this segment is also very less, pushing the capital gains on the higher side. Investing in townhouses is a balanced mix of higher rental gains than villas and decent capital appreciation, and building an asset for good end-use experience. Townhouse communities such as the Valley, Arabian Ranches 3 and Dubai South are witnessing a growing trend of 17 to 22% annual capital appreciation. Apartments, the backbone of Dubai's property market, accounted for over 70% of all the real estate transactions in 2023 and majority of transactions in 2024. Unfortunately, I could not find the exact data for you. The average rental yield of 7 to 9% made them a standout choice for investors targeting short-term rental markets or high-demand urban areas. Within a city which is one of the most visited cities in the world and the visitors are not stopping to pour in, apartments are the highest in demand as they are usually in the bustling areas. They provide the highest rental yields, perform very well in the short-term markets as well. If you plan smaller budgets, you can invest in 1 and 2 bedroom apartments. Slightly higher budgets, you might get into the luxury apartments, buying at best of the locations. And if you are planning to invest with higher budgets, you may invest in bulk buying multiple mixed units. It's very important to mention here that with the growing tourism, apartments at good locations benefit the most, be it for the capital gains, long-term returns, or short-term rentals. Statistically, if we analyze Dubai real estate market, a smart investment in any of the segments, be it villas, townhouses, or apartments, has given more or less equal appreciation. Someone who bought a villa in Dubai Hills, District 1, Palm Jumeirah, or has invested in townhouse communities like in the Valley, Arabian Ranches 3, Dubai South, or got apartments in Emaar Beachfront, Dubai Creek Harbour, Mina Rashid, or downtown, the investments have made equal gains, which means taking decision to buy based on your goals with market awareness is the most important thing. Now let's understand how did the rental market perform. Dubai's real estate market is recognized globally as a leader in rental returns with yields ranging from 6% to 10%, significantly higher than cities like London, New York, and Singapore, where returns hover around 2 to 5%. This performance is backed by data from the Dubai Land Department and leading firms like Knight Frank, Salvis, and Colliers International, and is largely due to Dubai's tax-free property ownership, strategic location, and massive infrastructure growth. In 2024, Dubai recorded 703,152 rental transactions worth 62.43 billion dirhams. The residential sector led the market, accounting for 485,692 transactions and a rental value of 40.20 billion dirhams. Apartments dominated with 433,713 deals at an average rent of 68,434 dirhams per year, while villas had 32,199 deals with an average rent of 231,822 dirhams. Townhouses saw 19,845 deals with an average rent of 154,009 dirhams. On the commercial side, 217,460 transactions contributed to 22.23 billion dirhams with an average rental price of 102,192 dirhams. Affordable neighborhoods like Jumeirah Village Circle, Sports City, Jumeirah Lake Towers, and Al Farjan saw rental increase of 19 to 22%, driven by demand from professionals and families seeking affordable and well-connected houses. Premium areas like Palm Jumeirah, Dubai Hills Estate, Downtown Dubai, District 1, and Emirates Living saw a rental growth of 5 to 7%, continuing to attract high net worth individuals. Established areas such as Downtown Dubai, Dubai Marina, and Business Bay remained highly sought after with the returns of up to 5% annually. Data from Business Insider showed that Dubai South gained a lot of attraction with 16% growth in downtown Jebel Ali and an 8% rise in Dubai Investment Park. It was largely due to ongoing developments around Al Maktoum International Airport and Expo City. The villa market experienced exceptional growth with rents rising up by 44% in suburban communities like the Valley by Emaar, Damac Hills 2, Arabian Ranches 3, and Damac Hills. Luxury villa rents in Jumeirah surged by massive 60%, particularly for larger properties due to its limited supply, increased demand for spacious home, and regulatory adjustments. Self-sustained suburban areas like Town Square recorded a 45% rise in rents, reflecting a growing preference for family-friendly living spaces. New villa communities in Dubai Land and Tilal Al Ghaf are also gaining momentum as more projects reach to their completion. Short-term rentals thrived with the data from STR and ADNA indicating average daily rates (ADRs) ranging from 650 to 900 dirhams per night for mid-tier apartments and 1200 to 2000 dirhams for luxury stays. Occupancy rates peaked at 80% to 85% during peak seasons and averaged at 75% annually. Popular areas for short-term stays included Palm Jumeirah for luxury seekers, Business Bay and City Walk for business travelers, and Dubai Hills Estate and Dubai Creek Harbour for their prime locations and modern amenities. Affordable areas like JVC, Al Furjan and Sports City also performed very well due to its competitive nightly rates. As we look towards year 2025, rental growth is projected at 5% to 10%, with listings expected to increase by 10 to 12% and occupancy rates stabilizing between 82 to 85%, driven by Dubai's population growth and tourism expansion. ADRs are anticipated to rise by 7 to 10% with the opening of new attractions and the hosting of global events. For investors, luxury areas like Palm Jumeirah, downtown Dubai, and Dubai Creek Harbour remain top choices for long-term returns and stability. Meanwhile, emerging affordable hotspots like JVC, Damac Hills 2, Al Furjan, and Sports City offer significant growth potential at much lower entry costs. Additionally, upcoming waterfront projects such as Dubai Maritime City, Rashid Yachts and Marina by Emaar, Emaar Beachfront, and new developments in Dubai Creek Harbour and Dubai Hills Estate near the mall and golf course as promising options for capital appreciation and rental gains. With solid data from DLD, Arabian Business, Financial Times, and global consultancies, it's clear that Dubai remains prime real estate investment destination. Whether your goal is long-term rental income or short-term rental gains, the city's blend of luxury, affordability, and high returns makes it unmatched in the global market. How strong Dubai's economy looked in year 2024. Dubai's economy is on track for another strong year in 2025. In 2024, the UAE's GDP grew by approximately 4%, with Dubai maintaining solid and steady economic momentum. During the first quarter of 2024, Dubai's GDP reached 115 billion dirhams, followed by 116 billion dirhams in the second quarter. By mid-2024, Dubai's total GDP stood at 231 billion dirhams, marking a 3.2% growth from the first half of 2023. This means Dubai is on solid grounds for many years to come. Key sectors played an important role in this performance. The transportation and storage sector saw a remarkable 7.8% growth in quarter 2 2024, contributing 13.6% to the GDP. The financial and insurance sector expanded by 4.6%, while real estate grew by 2.6%, with the property sales skyrocketing by 38% year-on-year, showcasing the continued strength of Dubai's real estate market. Wholesale and retail trade also remained cornerstone, contributing nearly 25% to Dubai's GDP. Looking back, the UAE's GDP in year 2023 grew by 7.6%, building on the strong 7.9% increase in year 2022, thanks to a post-pandemic rebound and strategic economic diversification efforts by the government. For year 2025, the Central Bank of the UAE projects GDP growth at 4.5%. The International Monetary Fund is even optimistic, forecasting a 5.1% rise in GDP, underlining confidence in the country's economic policies and diversification strategies. Dubai's economy is expected to mirror this trend, leveraging its strategic location, world-class infrastructure, and investor-friendly policies. Real estate remains a central pillar of Dubai's economy, driven by strong domestic demand, international investments, and mega projects. Emaar Properties, the biggest developer in Dubai, posted a 60% gain in annual returns, further highlighting the sector's resilience. In line with this, the UAE economy is set to get a significant boost with the introduction of gaming. I believe it's very important to highlight key government initiatives in the gaming sector and shed some light on their impact, especially on the real estate sector across the UAE and Dubai in particular. Scaling and growth, Dubai's winning formula. Dubai is going all guns blazing to welcome the HNIs and Ultra Is of the world. It's another effort to support the facilities and the lifestyle to bring more FDI and investments into Dubai. UAE has opened up for the gaming world with the introduction of first casino in 2027 by Wynn Resorts in Ras Al Khaimah. Dubai's established luxury, tourism and real estate sector makes it an ideal candidate for the gaming industry. Global trends have always shown the upside. After the launch of Marina Bay Sands in Singapore, its luxury real estate market prices surged by 25 to 30% in the nearby districts within the first 5 years' time. Similarly, Macau's gaming industry drew the revenues by $35 billion annually, contributing to 40% increase in the luxury real estate prices and over 85% hotel occupancy rates. Professionals and experts of the gaming industry that we talk to forecast that Dubai's prime real estate markets and high-end communities like downtown Dubai, Palm Jumeirah, Blue Water Islands could see a property price appreciation of bare minimum 40%, with luxury penthouses at prime locations reaching up to the price levels of $5,000 to $7,000 per square foot, which translates that the gaming industry might bring an infrastructure of 200 billion dirhams into UAE real estate in the next 5 years' time. If you talk about the gaming industry's impact on tourism, then we can take a reference from Las Vegas, which recorded over 42 million visitors due to its entertainment and casino offerings. No one can just imagine the economic impact of such developments. The hotel occupancy rates of Dubai, which are already at 75%, could increase to 90% or higher, especially near the entertainment hubs. It will definitely take up the short-term rental demands of the apartments and premium service residential accommodations, potentially commanding to 1,500 to 2,000 dirhams per night during peak seasons, which means a potential of 100% higher rental gains for the investors. UAE Ministry of Economy projected that increased tourism could contribute to 45 billion to national GDP. Additionally, foreign direct investments into the real estate coming from the casino industry impact could be more than $300 billion by year 2028. Shifts in global tourism and hospitality sector can become the catalyst for more premium developments, reinforcing Dubai's appeal to ultra-luxury net worth individuals. Analysts suggest that the property demand into the entertainment district could grow by more than 50% within the first 2 years of the casino's launch. We have already seen a significant appreciation in the prices in Al Marjan Island, Ras Al Khaimah, that will be home to UAE's first casino. It started in 2023 and in 2024, the demands have gone to the next level and every single launch at the prime locations was a complete sell-off. The prices started from 1,600 to 1,700 dirhams per square foot before the announcement, and now the premium properties are already selling at 5,000 dirhams and more. The potential introduction of casino in Dubai presents a game-changing opportunity for the investors, with real estate prices poised to climb and tourism revenues projected to reach record levels. It's definitely going to be the next chapter in luxury living and unmatched investment returns. The numbers don't just speak, they shout to Dubai. Dubai is on the brink of a new era of prosperity. Why Dubai is the brightest spot for real estate investors. Geopolitically, Dubai holds a very strategic location and acts as a bridge between Europe and Africa. Its stable political environment has positioned Dubai as safe haven for global wealth, particularly during the global tensions. For instance, we have seen a surge of 350% in Russian investments in the recent years. The contribution of Europe to Dubai real estate has increased from 2% to 9% in the last 3 years' time, and we have seen a heavy migration of ultra HNI and HNI from Europe, as the forecast is that Europe will stay slow for the next 10 years because of geopolitical reasons and energy crisis. Dubai constantly has seen a surge of capital inflow from Asia, Europe, and Middle East because of Dubai's reputation for its safety standards, infrastructure, and high-quality lifestyle offerings. Dubai also saw a continued surge of investments from the first world countries like the United States, Canada, and the top cities of the world. When compared to the top destinations like Singapore, Dubai offers flexibility and affordability. In a global economic landscape marked by high inflation and increasing interest rates, Dubai has shown a remarkable resilience and growth, outperforming traditional property hubs like London, Paris, New York, and Singapore, making it lead like a boss among the top cities of the world. If I compare Dubai with the top real estate destinations of the world like Singapore, Monaco, New York, London, Tokyo, Dubai looks like a penny stock. If you have to invest in Singapore, the average price per square foot for buying real estate is $4,000 per square foot and taxes. Monaco sells for $4,500 per square foot. New York is selling at $2,000 per square foot, and London, the initial investment starts from $2,000 per square foot. And when compared to Dubai, the starting real estate investment starts from as low as $380 per square foot, which means Dubai real estate prices to the comparable best destinations is 1/4 without any taxation and complications. Furthermore, Dubai's rental hits are among the highest in the world, averaging between 9 to 13% compared to 2 to 3% in London, 3% in New York, and 2 to 3% in Singapore, making it an attractive destination for investors seeking strong returns. In conclusion, where European cities and other top real estate hubs of the world struggle with challenges of economic slowdowns, regulatory restrictions, and inflated prices, Dubai continues to shine as the beacon of opportunity, affordability, higher rental yields, geopolitical neutrality, and amazing lifestyle offerings, making it the top contender for the best real estate destinations to invest in. Whether you want to invest for a rental gain or looking for a destination to live, Dubai real estate market is the most attractive and promising in the world without any second competition. The way market continues to attract high net worth individuals with its investor-friendly policies such as zero capital gain taxes, long-term residency visas, and the absence of inheritance tax, which is rarely offered in any of the international markets. According to Knight Frank, Dubai's luxury real estate prices saw an increase of 44%, the highest growth globally, while New York and London saw an increase of 2 to 3%, and Hong Kong experienced a decline of approximately 15% due to the political unrest. These were the numbers from 2023, and we are still compiling data for 2024 global market performances. This was how world desperately wants Dubai, and let me quickly tell you how Dubai is welcoming the world. Dubai government investment plans and offerings. Government of Dubai has already spent more than 200 billion US dollars, which is more than $500 billion dirhams in developing the required infrastructure and the trade zones in Dubai South only. Dubai has approved its largest ever budget cycle for year 2025-2027, totaling 272 billion dirhams with a significant focus on infrastructure. Approximately 46% of the 2025 budget is allocated to infrastructure projects, including roads, bridges, energy facilities, and the expansion of Al Maktoum International Airport. These projects aim to enhance Dubai's position as a global business and tourism hub. Economic Agenda D33, Dubai is on track of seeing double the economy from 1.6 trillion to 3.2 trillion in the next 9 years. Doubling the FDI from 320 billion to 650 billion, to raise the government expenditure from 512 billion to 700 billion dirhams. 400 new cities are planned to be added to Dubai's commercial map as well. D33 encompasses a new 8.7 trillion US dollars roadmap for the Emirates to double its foreign trade and emerge as the world's fourth most prominent financial center behind New York, London, and Singapore by year 2033, when Dubai will mark 200 years since its founding. Total investment from private and government players is more than 500 billion US dollars. These millions of dollars are not being spent on residential infrastructure only. Here are some noteworthy updates on the developments underscoring Dubai's commitment to world-class education and innovation in 2024 and 2025 till 2027. Dubai and the UAE are being global education hubs with prestigious institutions setting up campuses. IIT Delhi will open in Abu Dhabi by September 2024, and IIM Ahmedabad will launch its first international campus in Dubai by 2025. Additionally, Schema Business School, Plekhanov Russian University of Economics, and Symbiosis International University are expanding into the UAE. While Harvard University doesn't have a full-fledged campus, it maintains a presence through the Harvard Business School, MENA Research Center, and other initiatives. Dubai's education sector is further boosted by 39 new institutions for the 2024-2025 academic year. Another government offering that needs to be mentioned is its visa reforms. Dubai's Golden Visa program continues to thrive, reflecting the city's remarkable appeal to global talents, entrepreneurs, and investors. In 2023 alone, an impressive 158,000 golden visas were issued, nearly double the 79,617 awarded in year 2022, showcasing Dubai's commitment for fostering a future-ready community. While 2024 data is yet to be revealed, the upward trend highlights the success of the UAE's visionary reforms. I can say one thing with confidence, that the visionary leadership under the guidance of His Highness Sheikh Mohammed bin Rashid Al Maktoum's vision for the city is not motivated by competition, but by a steadfast commitment to progress and unity. His remarkable foresight has turned the impossible into reality, creating a city where dreams thrive and dignity is preserved. As we wrap up, here are my top suggestions in different segments for year 2025. Luxury independent villa segment for 2025-2026, definitely consider the Oasis by Emaar, Dubai's first ultra-luxury lagoon community. If you are a waterfront lover and want a dream home in the middle of the sea, do not miss ambitious Palm Jabal Ali by Nakheel. And towards the old Dubai side, wait for the golfing paradise named Dubai Island, a community again from Nakheel within the lap of Arabian Gulf. Farm Gardens by Emaar is another standout located along Dubai Al-Ain Road within a lesser budget. You can definitely consider if you are looking for larger homes for the family. Looking for a villa in the south side? Do not miss Villas by Expo City and upcoming launches by Emaar. Looking for townhouses in the budget range? Then definitely consider the Valley by Emaar, Nadal Shiba, the Heights Country Club and upcoming community by Emaar and Emaar South are the best options. Rashid Yassin Marina by Emaar, Dubai Maritime City majorly by Umayyad and beyond, Dubai Creek Harbour by Emaar, Dubai Islands by Nakheel. Dubai Hills Estate are my suggestions if you want to buy apartments in established Dubai. Do not miss Expo City and Emaar South if you are looking in the upcoming south side of Dubai. Al Marjan Islands, Emaar Beachfront, W Residences in Dubai Harbour and Dubai Islands if you are looking for luxury waterfront developments. These were the projects that I personally am waiting for, but this does not mean they are all. There are many developments that are worth considering. You can contact your real estate advisor for further guidance, and if you do not have one, feel free to contact on the number given below on the screen. You can also leave a WhatsApp message to connect with us. At last, I have been in this undervalued Dubai market for years now, and I like to stay updated with trends and data. I'm always there with boots on ground where things actually happen. With all that experience that comes after meeting with many clients who built and invested fortunes, I can say that this living paradise called Dubai is on the brink of explosion in prices. So if you have invested, stay put. And if you haven't, I can say only one thing. Yalla Habibi, come to Dubai. Do not forget to like, share and subscribe to our channel for more real estate insights. Signing off, Archana Bhan, Experience Realty.